Hey everyone, welcome to your daily update for Sol and BTC. Starting with liquidity, we've spent a bit of time here. So overall, the 1 day, 7 day, and 30 day liquidity is starting to turn bearish. So people are opening more shorts and beliefs that we're going down. And based on that, we do have these targets to the upside that are reasonably close proximity to where we are. We've sort of been teasing them, like, we went up to about 104 on BTC, but we do have sort of reason to go to maybe 105. And I think as more shorts start to pile in, we might see a little bit of a push up to actually take some of that liquidity. And of course, for Sol, that could be anything like heading up to the 160s again. Like we actually ended up going up to about 164, but most of the targets, the sneaky targets, are more like around 167 or 170. So we may go take that liquidity. Now, unfortunately, though, the Sol looks good, but BTC just looks bad. And it reminds me a little bit of when we're at the 76K area, and everyone was sort of thinking, oh yeah, we'll buy at 69, we'll buy at 69, we'll buy at 69. In fact, actually on the high time frame, like on the really high time frame, 69K BTC is actually still an untested level. So there is the chance that you'll see that again if we do in fact have a bear market. Now, at this stage, we're not really seeing too much support develop where we are. We are closing under resistances. We are creating more resistances on BTC on a daily basis. And I still think that we're probably going to do a bit of a sweep of that 100K zone. When I look at the hourly chart, what I see is I see that they have done a really nice job of creating a kind of double bottom around 99, which most people look at double bottoms and they think that's a nice safe place. I'll go and put my stop losses under there, and then out comes some narrative that can be attached, and down goes a candle and sweeps it. So if you sort of look at how it's playing out just on the other more detailed liquidation maps, you can see people are starting to put their stops and liquidation positions down here, basically from about 98 down to around 96. And structurally, we have some really big supports in there, which I think you'll see when we get to the BTC section today. Now, effectively, that does mean that people are putting their liquidation levels inside of a range. And whenever you do that, you're asking for trouble. So it might look fine at the moment, and it might look safe, and it might look like a double bottom, but having that liquidity there, if a large player wants to build a big position and they want to pump this thing up, then they'll just wick down into that, and then they'll open their position and go. So interesting that Sol kind of isn't doing that. So yeah, a little bit two minds on what these are doing at the moment. Sol kind of does on one part look stronger. However, what happened here is these wicks that went down, down, down when everything was really bearish, a lot of people would have opened shorts there, and those shorts are trapped, because the price went up. But it's a little unusual that they brought this down into those trap shorts and actually gave them the opportunity to escape, or at least half of them anyway. So this pump may have just been a case of these shorts that were trapped down here all saw the opportunity to get out, so they all start closing their positions, and that buy pressure of closing shorts actually helps bring the price back up. So whilst BTC really has some big indicators that it looks like it's going to go and have another dip, Sol doesn't really have those indicators, but at the same time, it's just hard to believe that that BTC would go down into that 96 area and take all of this lower liquidity without Sol at least coming down lower than where it previously went. But we shall see. So let's have a look at these charts. So today we have heaps of closes. So there's a lot of structural change that comes in today, depending on where price is at the UTC close. Tomorrow is an interesting one. It's technically a prime day from a daily perspective. We only have a 1-day close, but we also have a 1 week, 2 week, 4 week, 11 week, and 22 week close. So there'll be some big weekly closes to look at, and you do tend to get some huge structural moves around large weekly closes. Interesting to see that it's also a prime day as well as a whole bunch of high weeklies. So I don't know quite what to expect there, but we shall find out. Maybe we get some big moon pump, or maybe we get some kind of massive dump too, but we'll see. Looking at Sol BTC, we engulfed yesterday. Yes, we did. We wicked up. We managed to hit the fib target of the engulfment. Unfortunately, that was basically the same level as the resistance, so it's run into that 15869. And currently we're back down under the trends again, and we're on the wrong side of the uptrend, and basically it's a bearish close if it closes like this. It isn't breaking anything though, and that's what's kind of what's a bit tricky about the Sol strength at the moment, is that none of this is actually ranging. It's just single candles. So we have broken or done one trend break of the very, very localized interior downtrend. The older, bigger trends that come from further away are still keeping the price down, but the only way to break those trends is sideways, and normally it takes up to 5 trend breaks of this kind of interior before we're actually going to see any kind of reversal, which doesn't really fit in with a lot of the other stuff going on right now, because that would sort of imply that we're going to be down here for at least another 4 days. But some of the other time frames look like they're ready to break in one direction or another faster than that. So if they do bring this up and close this over 15869 for the day, well, that's very bullish. That puts us back up above the high time frame support, and then we can bounce off that to take a go at this exterior trend and then head up to the hold level. So there's sort of like a process that kicks off when you break an interior trend like this, and that process is simple. It's the next candle is going to try and make its way back to the hold of the range. So if you just forget everything that's on this chart and just look at just that part of it, breaking this one trend that was down here with this yellow hard close candle here means that this wants to come here. Okay, and how long it takes to get there is dependent on all this other stuff that's in the way, and that's why it can take a bit of time to get there sometimes. And if the same kind of thing had happened after a faster fall, or if it had happened quicker, then it would have been able to get back up there quicker. So when you spend too much time down, you create more resistance. It's harder to go back up fast. So that's where that's at. As far as just looking ahead to tomorrow on the weekly may just continue pulling the candle up above the range trend. So it could just be a slow grind, or we might get a little bit of a strength boost today as this starts to kick in and starts to try to come back up above that trend. If it doesn't do that, then unfortunately that means it's under that trend, and when the next week opens, it's going to potentially have that as resistance, so making it even harder for that daily to play out. Okay, let's have a look at these dominances. So not exactly where we want it on the daily. What it's capable of doing here is having a new candle on the side of the downtrend, which allows it to move up. We really want to see this lose this 67.18 level. So we spoke about that yesterday. If I haven't said it already too, if you didn't watch yesterday's video, you should really watch yesterday's video, because like what was in that video is some stuff that we have never really talked about before, and mind-blowing stuff. So yeah, definitely worth watching yesterday's video just for the little secret hidden alpha and education that was in it. So yeah, with this, if we were to have like a perfect close today, it's going to be pulling the candle back down, getting underneath the 67.18%. Alternatively, we open tomorrow, and then we will end up potentially having another little push to the upside to test the resistance, we will have a hold level here between 67.9 and 68.13, and so it's really up to that candle to make sure that this one cannot move higher. And then if that does reject, then we get another downwards candle, and hopefully we can get through these trends. So basically, hold levels are designed to break trends. If the hold level can stop the price from moving up, eventually over time it breaks through the trend. So that's you can speed that up obviously by having nice bearish rejections, which create lower hold levels, which could be the underside of this candle. So if tomorrow closes down below what was the open of this? 67.51. If tomorrow closes down below 67.51, it creates a hold level at this level, which then makes it easier and faster to start breaking down these support trends. But as it currently stands, unfortunately, the dominance of safety assets is looking a bit too strong. All those trends are looking a bit too strong, and we're not really seeing them break down yet. Okay. Looking ahead to the weekly. So ideally, in the next 24 hours, you just want this to be pulled back so it's under this weekly trend. That gives it a better chance of actually breaking down. But what you don't want is to see it up any higher than where it is now, because if it was to move up any higher, then it would be able to bounce off the top of the trend and have another go at the 68.47 level, which is basically all we've really got to keep this thing, down and to break this trend. The weekly might shift the topside resistance trend tomorrow as well, but obviously we'll have another look at this tomorrow. Okay, let's have a look at these totals. So yeah, the totals on the daily, that resistance at 3.18 managed to give it a bit of a kick and stop it from progressing up higher. So that's the level we really need to overcome on the daily. If we can get a daily close over that, and ideally over the trend. Could it happen in the next 2 hours and 38 minutes? Yeah, it could. We've had tweets and various things that have magically appeared on Sundays, which have sent prices up before. But if it doesn't, then what's going to happen is the candle is going to open on the wrong side of the support trend. It'll be an interesting position, because it will actually be, if we open a candle, say right here, or maybe just one tick up, we would be in a position where we could lose the uptrend, but also in a position where we could break the downtrend on the next candle. So quite often what happens is you then see a bounce between the reverse of the two trends. So if you've got these two trends that are almost like an X, you open in this gap, and then what happens is you actually bounce between the two of them, which is a great sort of type of liquidity event generally. Bit of a sweep to the upside and the downside, or downside then upside, which of course means nothing until it closes. And of course, if it closes it in accumulation, then it's technically a break of the downtrend, and if it closes in distribution, then it's a loss of the uptrend. So what happens then is what gives you your direction. But we have still shown that these two levels down here, these 3.04 sort of levels, we are showing with this that they are still very good support levels. And we haven't gone back and retested the newer support that's been made all the way down here at 295 yet. So there is still decent support in here. We've got trend support. We've got enough that at most we could look at the double bottom on risk assets, maybe having an occurrence, like an overall double bottom, much like we might have seen a double bottom on that BTC. But what we're sort of saying here is the entire market may have a double bottom. So that's yeah. Now, if it does pop up, even if it does actually technically get above that 3.18 level, there's then a range trend, another range trend, and another range trend. Yeah, so there's a bit of stuff to deal with to get up through all that. It really does need a pretty decent bullish pump to get up and close inside those levels. So looking at the weekly, I think our weekly target was so it's got too much stuff overlapping there. Give that alert. Yeah, 3.19 was the weekly target based on the bounce to the hold. So we are still under the weekly downtrend. Yeah, there's not really anything bullish you could say about this chart. This chart looks very bearish. We need a pump. It really needs to get that thing back up, because if it opens on the underside of this downtrend, then the chances of you rejecting is very, very big. Yeah, I hate to say it does look pretty bearish. Okay, monthly's a bit far away, but you'll see the monthly is. So what I said yesterday or the day before about the monthly is it is a little odd that it kind of didn't quite tap the range trend down the bottom there, which is yet again sort of indicating a potential for some kind of double bottom. Okay. And if we take BTC out of it, it looks better. And this is the thing. We know that the alts will go down if BTC goes down. But the comparison between these two charts is huge. So much stronger engulfment on the alts, total market cap for the alts. And we may even, we don't have to go up, in fact, we're basically on it now. We don't have to go up much at all to be closing over that 108 level. And then potentially that can push the alts up to, you know, the 112, the 113 being the next resistance. So yeah, the alts just look so much better than BTC. They definitely want to go in the other direction, that's for sure. Okay, and if we look at the weekly, so we're still under the resistance, but you can see the weekly break level resistance is that 113. So, you know, the daily close just has to be up a tiny bit, and it can actually then push the weekly up. So it's, yeah, don't know quite what to make of this. Alts look really, really good. BTC looks like it wants to fall off a cliff. So, all right, let's have a look at Sol. So Sol on the daily is basically just consolidating. So it's more likely that this is accumulation, just simply because we've had, you know, these previous falls. So if you kind of look up here, you've got fast drop, up, fast drop. This is pretty much just all consolidation, fast drop. And then I would say that this is accumulation going on now, which is most likely going to mean that there is going to be a move to the upside. We had, you know, better closes than we did on BTC. We didn't engulf anything, but then we also didn't engulf anything in the other direction the next day. This candle, if by some miracle actually closes up today, which, you know, could happen, 2 hours, then this candle that's back here from November 6th could become the whole candle for a new range. And that's some of the stuff we talked about in yesterday's video. And the various levels that are here are confluent with all the various resistance levels. So it really wouldn't surprise me to see, I don't know what'll do it, but it really wouldn't surprise me to see this thing actually flip up. And if it did flip up, then I'd look at that 167.786 as the first target. If it closes over the 167.786, then I'd be looking at 176 as the next TP, and then 185 and 194 and so on. So yeah, who knows? Maybe tweeting coming in the next 2 hours. We don't know. Now the other option is that it doesn't do that, because, you know, it doesn't have to do that, and we open below these resistances. We don't really want to be opening, you know, under these if we can avoid it, because it just means more time to actually break them. And much like what is possible on the dominance, we might end up opening between the two trends, so the support trend and the resistance trend, in which case there may be some kind of, you know, sweep event. So you might get a dip and then a pump, or a pump and then a dip, you know, something like that. But I'm still watching these lower levels. It's still very likely that, you know, if BTC falls down, that Sol's just going to have to go to them regardless. But it could do it, you once it's on the opposite side of this wedge that it's kind of just pushing through now. But much like the dominance, this has already broken a downtrend. Its goal is to go up. We've got confluence with this candle, so if this actually becomes our hold candle today, then the body of the opposite hold candle up here at about the 185 is the level 3. It just makes so much sense for this thing to have a short squeeze in the last couple of hours of today, but we'll see. Okay. And looking ahead to the 2-day, the 2-day is on the correct side of the trend to break the trend, but it is touching the trend. So that cannot actually break the trend. If it closes where it is now even, which is just above this level, so what's this, 157? Yeah, so 157.109 is the high time frame 2-day support. The candle that closed prior closed yellow, so that support is not broken. If today's candle closes over top of it, then that could kick off a bounce pretty much from where we are now straight up to the next level, which is 66.618, and then up to the next level, which is 172, and then up to your next level, which is your 175, and until eventually you get up into that whole candle. So technically we need one more 2-day candle in accumulation to be a proper interior trend break, but the horizontal the horizontal support could kick off the creation of that candle anyway. So it is looking it's just looking so much better than BTC. Unfortunately, when you see this kind of thing, if BTC dumps, then the next candle will just push down. That's kind of why I think we have to come down to this 141 level, even if we don't want to, even if Sol doesn't want to. I think it might just end up doing it because BTC might go back. So just keep that in mind. If it starts to come down to this 141 area, that could be a very, very good place to look at getting some entries. Failing that, it's going to just try and grind its way up. Seems to be what it's doing. Of course, if we get sell pressure right near the end of the day and it pushes the price down below 157.109, then any bounce on this time frame won't be as sustainable, because like how this previous candle became a doji, it became a doji because it started on the wrong side of the it's hard to name these things, really. You technically, it started on the wrong side of the support. It's not actually resistance yet because it's not hard closed, but it will try to become resistance if you approach it from the wrong direction. So that's something there. Okay. The 3-day is back up inside of its support, and 3-day support's pretty good. I mean, we've had several all-time highs kick off just from 3-day support on BTC, so it's pretty good to be up inside there. Same sort of levels. We've got 2 supports actually, which kind of overlap. We've got 155.721, and the more important one is the 157.109 because it's got the confluence with the other time frames. Okay, and our 4-day move, I think that has technically played out. So 4 days ago, if you rewind to one of the videos 4 days ago, what we would have said is that we were going to get some kind of move between the support level here at the 147.758 and the prior one that it closed under, which was the 161.041. So that move has played out. If you're a swing trader, you would have been entering down here and just TPing up there, and that's job done now. There is a prior broken trend that the next candle could open on the correct side of, which might allow it to have a bit of a move. And the next 4-day resistance is sorry, what did I do there? The next 4-day resistance is basically up here around the 174 area. So if we do get that push today, magical tweet pump something, squeeze, blah, blah. If we do get that today, then closing over 161.041 then gives the next 4-day candle the goal to go up here and hit that 174 area, 174 to 177. So it's looking pretty good as long as we get the closes we need. Okay, and the 6-day, that move would have played out already. So same sort of level, 146.639 was the long. It's been back up. We have definitely gone back up to 164 during this period, which put us above the 161. We haven't gone up above that trend. So yeah, the next candle open, we really want to be above 161 for close. And then we might have a fight with the trend. If we can get above 166 for close, well, that's even better, but it is what it is. And then we get into some of these bigger ones. So the next 8-day candle could come back to the trend. We haven't actually tested the 8-day support. So the 8-day support is probably going to be, let me guess, 141. Yay, 141,350. So the next 8-day candle may dive the trend to the horizontal support at 141,350, and then within the time frame of that 8-day candle, it could retrace back up. So this would be a trend sweep into a horizontal level. If it does this, which is a type of trade you can take, if it does do that sweep over the next 8 days, it should try to pull its way back up to 176. Okay. And the 12-day, yeah, if it closes, most of these closes really need us to be closing over 161 for them to be really good today. And I think that can happen based on the 4-hour range that's been built at the moment. So if we dip down to 152, we could bounce the trend again. If we sweep, the support level on the 12-day is a little bit lower down at 140.731. So if we sweep to that, then you can get a bounce, and that bounce. So this is now assuming that we don't get back over 161. Then 161 could become resistance and try to push through the trend. In doing so, it could push down to either 140.731 or maybe 133. Super bearish case would be down to 127 or 120. But either way, if it did it from the top side of the trend and that scenario plays out, then building positions in those levels, swing positions, not high leverage, preferably just don't even start them with leverage, just start them on like a 1x, build them as they go down. Don't bother building them in between the levels, because it's like from a 12-day time frame, it's just these levels that are important. Everything in between them is noise. There is nothing. If you are not going to bounce off 140.731, then you will have to go to 133 to find the bounce. So too many people just add to positions at the wrong time where they just shouldn't be. So if it does that and sweeps into these levels, then you could start to build something to head back up. If it can't get back up in the next 12 days, then the chances are it will just reject when it hits the backside of the trend, and you could just take your first profits there and then set your stop loss and see if you get continuation to the upside. Now, if it does close over the 161.041 today, then the whole candle, which starts at 174, the wick of the whole candle, anything up inside there becomes the resistance. Kind of lines up nicely with the trend as well, because the trend would also be resistance. Kind of lines up really nicely when we look at that liquidity and see that most of the liquidity is gone by the time you get to 174. So there's a lot of confluence in that. We might see a close over 161 and then a push into the 170s. Okay. And if that happens, the 173 area would happen to be the break level of the 13-day. That would then quite likely reject, and then could send us back to 140. So the range certainly could start expanding, because the candle is under the trend on a lot of these. Okay. And then as we get bigger, so this is one of the moves in play, and to fully understand this, so it's a 24-day move. To fully understand this, watch yesterday's video. It explains why this fib is here and what it all means. But pretty much what happened 24 days ago, short version, is we created a whole candle, we engulfed it, we closed under the wick rejected, and now we're down inside this part of the greater range. Now, if this range completely plays out, which everyone hopes it doesn't, but if this range completely plays out, then you're going to see $72 SOL. But to completely play out, it has to close candles under the next levels, which at this stage, it isn't. So, even if we close here today at about 157, we're still above the trend. We're still above the prior broken trend, and we're above the range level of 151. We could wick through 151 again, like it's done it twice, already in these two candles. So it could happen again. But as long as it stays in that area, what happens is it then goes, okay, well, I need to test the other side of the range. And the other side of the range is around 190. So this is potentially failing, failing to go down. That's probably the best way of putting that. And yeah, there's more about that in yesterday's video, which is kind of why it's worth watching that one. Okay, so one of these time frames when we get to the end of this is really scary. I think it points to Sol being all the way back at the beginning again. Well, actually, sorry, that might be BTC. Might be BTC. All right, so we're going to have a hold level between 185 and 200 on this time frame. We are going to be above the trend. Over this last week, we have bounced off so many high time frame trends. It's just crazy that we haven't moved up on Sol. Sol wants to go up. That's all I can say. It really wants to go up. The thing stopping it is BTC. So it's either they just really want time to accumulate at these prices, big positions. Maybe that's why it's ranging down here and staying down here. Or it's just waiting for BTC. And yeah, the only thing and that's kind of why I keep repeating, the only thing I would say about going big, and I have no big positions open on Sol. I'm just scalping each day, and I don't really want to open a big position because it just seems like it could dip. And the amount of money you can make just scalping the range every single day anyway, it doesn't really matter if you have to, if BTC does a dip and then the whole market starts to bounce, it doesn't really matter if you enter a little bit late for that move, because look how high these targets actually are. So, if you enter at 162 instead of 157 for the sake of it, but you've got confirmation because BTC's finally found a base, who cares? You can make all the money, or should have been making all of the money over the last few days, last week, etc., as we've been ranging. So, okay, we're going to get a range trend on the 39-day. We've got resistance starting at 185. I mean, a basic type of trade is first touch range trend, which means a double bottom down to say around 142 or lower. We bounce the range trend, we go back up to 185. That's a basic type of trade that I would take on a lower time frame all the time. This is just a really big version, which could take a lot of time to play out. Okay, going to get a range trend. We're going to get a hold level at 188. Yeah, I mean, this is, as long as we don't close the day under 155.721, because if we close under that wick, we can reject that wick. And so some of these timeframes can be a little scary because this particular time frame is not even achievable. It basically sends Sol back to $29. And the bottom level is in the negative, so it can't even do that. So it basically sends it back to zero. So let's just say we do not want to close under 155, 155.721. We do not want that on the table. So, and also just be really careful if it starts to get above that 188 area, because you are technically inside that hold candle once you go above 188. And yeah, the bottom of the range is zero. So, okay, it's a bit scary that, eh? Right, so the 78-day, we're going to get a range trend. We are under the downtrend, but we're going to have a new support trend, and we are going to be above that. So even if we just do a bounce between the trends, which is kind of like the most conservative move that could happen without even testing the upper range top, then that gets you anything under 152 bouncing up to about 173, 174. Okay, so that's a... Now, if we do test the topside range, that's 204. It's not likely that that is going to be a sustainable thing. So if we do that and we push through that and we keep going up from that, yes, we could go up into these 260s, etc. There would probably be a really big rejection if this thing hit 264. If they want to do a blow off top move, it'll sweep all these. It'll sweep the prior broken trend because that trend is moving. So there are cases, and this is like it's hard to be bullish or bearish. When you move a trend, you quite often retest the prior trend, and so there is a case that we go and retest the prior trend. If you're at a point of a cycle where there's going to be a liquidity sweep and go into a big long bear market, they take as well, a normal bear market, let's just say, they take as much of the topside liquidity as possible. So heading up there, sweeping that trend, some new high that we haven't seen before, could be the end, right? But it's also, you also just have to be really cautious because 170 could also be the end because we are still under that downtrend. And as you can see from every candle previously, yes, we've been able to go through it, but where do they all end up? They all end up back below it. So, nothing has changed about Sol having a really sustainable future, although it could. It just needs to get above these trends, and stay there. Right. Okay, again, another support trend on the 104 day, but still under resistance. Resistance is about 174 for the first resistance. And to put it in perspective, for this to actually have a sustainable move, the next 104-day candle has to get above 188.6, and it has to stay up there. And for it to be a real breakout move to create an upper range, that candle has to close over 253.195. And if it does that, you're talking high time frame range creation kicks in, and what people call price discovery, which is quite measurable, but you can, if you know where it starts. So, and it could start with that, or the next candle after that, depending on where it closes. And all it would really have to do is, over the next 104 days, it would just have to go and retest the backside of the broken trend, which is something we know price will do on very, very common basis, and stay there. Because if it does that, that one thing actually creates that next thing. So, yeah. All right. 156 day. Well, bottom's about 120, and the top, funnily enough, is about 170. And so, and these time frames are big enough that we can hit that 120, go back to that 170. There could be so many tears and capitulation and all that kind of thing during that time. But really, it's just a move between a trend and a trend over a large period of time. So, yeah, so definitely on the shorter term, thinking that, it's good if we close over 161. A little bit more medium. If we do see the 140s, that would be quite good places to look to buy. 120s are on the cards. Definitely want to be looking at de-risking once you start to see anything close to 169, 170, just kind of watching that area, see how price behaves. And yeah, and if we can eventually break out of this stuff, then we can have some pretty fun times. But yeah, at the moment, just play it safe. Looking ahead to the weekly, funnily enough, same level on the weekly. Really just got to be above this 161.041. We have done the weekly bounce already, so that the minimum obligation of the hold candle has happened. So there's no real necessity to go higher than that. And we haven't hit the range trend on the weekly yet. So we've hit one range trend, not the other. So the whole candle for that starts. So the range trend that we hit, which was this prior range from back here, that meant we needed to go to 159.3, being the start of the whole candle for that prior range where the range trend exists. And so we've done that. So there's no further obligation for that price to move up. However, if it comes down and hits this range trend, where is it? Yeah, this range trend. If it comes down and hits this range trend, then the whole candle for that one is there's that number again. 17 starts at 175. So yeah, if we do dip to the 140s, it on the weekly, it does give a pretty good indication that you'll get a move back into the 170s. Okay, let's look at BTC. Sorry, that was really long. Okay, probably should have done BTC first, because some of these timeframes can be a bit more bearish. People like happy vibes. So BTC really needs to get above this range trend. I mean, it's been above it before, and it just keeps going below it anyway, but we're just consolidating on the trend. We are in a place where at least, and we were in this place yesterday as well. Yesterday, we were in a place where we could have closed the candle up. We still technically could if we get a short squeeze in the next 2 hours. But if we don't, let's just say we don't, then we're going to open once again under the trend, which is about that 102.628. We're going to open under the resistance, which is that 103.034. And we're going to have to get above it. And that's about it. So it could have a dip down, bounce off the backside of the trend. That would mean, going back to that 100K area. It could try and use either we've got daily support, which we did create, which is the bounce that we had on yesterday's candle. So same pattern. This is the pattern that I'm hoping everyone is starting to understand now and how to take these trades. You've got break levels that exist in the past. You test them, you fail to distribute back to the break level, you put your long order here, and then when the break level gets tapped the next time, you get an impulsive move off it. So, that would have meant you were in at 99 and you would have gone to the backside of the range trend probably if you wanted to be safe, which means you were in at 99.5 and you were out at 102.5, And if you can scalp a move like that on BTC every day, then what percentage is that? Let's have a look. Okay, so all I really want to see all my followers making is if they can compound their portfolio by 1% a day, you will be rich in no time. Okay, and that's a 2.97% even just on spot. Okay, so for tomorrow, if we open up down here, yeah, probably is going to have to dip to go up. The levels of resistance that it still hasn't tested yet is the 104.483 being the backside of the range trend, and the 105.050, which is a hard close resistance level. If it gets through that, then we're at 105.780. If it gets through that, we're at 106s. The 106 level is going to be a relatively big level, and then we've got the 107s, and then we run into 108 and trends and weekly stuff and really big stuff. So it's probably not likely that it can just power through all that. I'm thinking that if we get to this 105 level, that's probably enough of a trigger for them to then sweep down into these 90s, but we shall see. Okay. Now, we have held the 2-day support as well. So the 2-day support was created all the way over here. So that range worked, shot up here, worked through it. Right? You actually got quite an impulsive move on that first one, which took you. And so these trades that I just mentioned on that daily, the ones that I, even if you just do them, say as a 1-to-1, 1-to-1 and risk 1% of your bag, you could take this trade and you could have taken it up to, that would have been TP1, TP2 would have been up there. You would have just slightly missed that line if you wanted to try and take 2 TPs on it, or you would have just taken it there. that would have been it. So could have caught a, also just the higher the time frame, just be aware that sometimes they do liquidity sweeps like this. The other one you could do is you can trade the trend. So this blue candle here, this moved the trend. So it was previously all the way up here. And then when that candle closed, the trend moves to the bottom. The next time the trend's touched is a first touch trend bounce. So that's another type of trade that you can take. And because it approached it from the top side of the horizontal level, that is diving a horizontal level to get a trend, which is the same as when a trend dives to hit a horizontal level. It's a type of trade that high probability will always reverse. So, there's just over these last 2 days, there's on this one time frame alone, there's a couple of really good, moves you could have made. So if we close up over, what level we got here? If we close up over the 102.561 level, then the candle will be in a pretty good position to open on the top side of that resistance and on the top side of this range trend. Sorry, top side of the new interior trend that's getting created. And then the next one could give a push. And if it does give that push, then you're into that 104.5 resistance and then that other range trend, which will probably reject, which is, funnily enough, 105. So I got confluence with the horizontal level on the daily chart that tomorrow the 2-day resistance is sitting where the 1-day daily chart resistance is. Okay. And looking ahead. So for the 3-day, 3-day needs to move up a little bit just to get clear of the trend. Now, if it doesn't, what that means is that, hopefully you can follow all this, the 1-day and the 2-day could push the price up to hit the resistance, but the 3-day could be approaching from the wrong side of the trend, which means that when the targets of the 1-day and the 2-day have played out, they reject their resistance, along with the 3-day pulling the price back down under its trend to reject down to hit lower support. So if you follow all that, now for the move up to be a more sustainable move up, then we need this 3-day candle to close over that 102 sort of area, probably around that 102.800, roughly that high sort of 102s, so that then it's not going to approach the lower time frame targets from the wrong side of the higher time frame trend. And that means it's actually capable of potentially coming up to maybe the 106s. So just to test this break level, that it's hard closing and breaking today. But it is also hard closing and breaking that break level today if this candle closes blue, which means that 106 will flip to resistance. So, okay, what's next? So looking at the 4-day, 4-day just needs to go up just a little bit to be on the right side of the trends, to have a bit of a move up. Resistances, you got prior broken trends, horizontals, everything is basically 105, 106, 107. So pretty confluent. But it is good that it's closing where it's closing, because the last thing you want is this candle closing under, what level is that? 101.313. If they push the price down before the end of the day to close under that, they really are going to nuke it. Okay, so just watch that 101.313 for the close today. We don't want to be under that. Okay, looking at the 6-day. 6-day hasn't actually tested any of its real supports yet. This is where things can start to get a little bit bearish. We haven't technically broken the trends. We haven't technically broken or hard closed the upper levels, but we're in a position that could be very much the start of a bear market if it doesn't go up. It has to go up on the next 6-day candle. Otherwise, closing a candle down under here, there's not really any decent confirmed support, and you're starting to talk, the 98 could flip to support as long as it bounces back up and spends 6 days not coming back to it, then it becomes support, then it can be the base of the whole range, and then we can head back up into these higher levels. But that's trying to look several candles ahead. That's kind of hard to do. And as it currently stands, it would just be way nicer if this thing closed up. But to do any kind of major difference to the future of this structure, we have to close pretty much over 104 today, which may not happen, but that's what it needs. Okay, this is a little I told you so moment. I'm sorry, I'm just going to put it out here. A while back, I posted this and just said, hey, last time we closed a candle under this old 8-day range trend, we lost $20,000 off the price. This one hasn't been so bad. Okay, we're lucky the trend is closer this time, but we did close that candle 8 days ago, and as you can see, we went into that dump for the 8 days, and we came down and we hit the trend. So the good news is that this move might be done now, because we have found that trend support. We don't know, because we're still down, we're still under this trend, or under the interior. But yeah, that's just the kind of thing you got to watch out for, and why range trends are quite important, because when you close a blue candle under one, that starts the process of that dip. Same thing, of course, if you close a yellow candle over one, you start the process of a pump. But if this was to go down and test support, it's around that 98 for the break level. It's not guaranteed support yet. If you want a guaranteed support, it's about 92. Or you've got this prior range trend, which is coming through here, which is around 93, about 93, 700-ish. Okay, the 12-day, that is closing up inside support. It's got a range trend sitting at about 96 that it could retest, and then that could create a bounce back to 100, somewhere between 103 and 110. But it would have to go down before that 110 target's really even a thing on that. Okay, 13 days, not too bad. It's closing under a trend, which it could reject off if it pushed up to about 106. It hasn't technically hit its lower trends, which are about 98, and it's got whole candle support down just below 90. So 24-day. Okay, so this one warrants a little bit of special attention. Okay, so this whole candle at the top has a close today that is now below the 1618. So that means that 109 can become the effectively a range. It can become the base of a range, and the target for this range would be to try to push to 93,234. And we know, if you've been watching these videos, that there is heaps of really big high time frame support down around 93,570. So this is kind of in play already. It does actually also mean that the next candle could just reject off 103,897, because that is also a level in this greater range. So effectively, we are now over the 50% of this range. It's a short range rather than a long range. Sometimes it helps if you go Alt-I, depending on how your brain works, and you can see that we are now above that. Now, if we somehow have that pump again today, and this is where this confluence kind of comes from, there's all these things that get better if we close over 104 today. But if we don't close over 104, there's all these things in the charts that are actually saying, oh, okay, we could dive, or we could complete this range. So we might go to the 98, and we know we've got all these other supports sitting at 98 on different time frames, but it's also just part of the higher time frame ranging process. We could go to 93, and the same thing applies. We know that there is support at 93, but it's also just part of the overall high time frame ranging process. And then if we look at the size of the wicks that have swept these trends prior to big moves, when you got magnet tool on, it's really hard to actually use that measuring tool. But if you look at these sort of sweeps of the trend, suddenly it becomes pretty fair to say we could sweep to that level. Now, if we do and we hit that, then that range is completed. And based on that support that's there, well, then we could head up to an all-time high. You know, when you look at that chart from that direction, would that not just be another step in the ladder? The only difference is it's going there when you turn it that way. So I don't know whether that makes you bearish or bullish, but I think I can see the bullish case of actually going down, and how that might actually be just something we have to do. We might just have to finish this thing off so that it can actually then find the right trend to head in the right direction. So that's the 24-day. Okay, and the 26-day is sitting on a range trend. Yes, it would be better if that went up slightly. However, if it opens where it opens, and this is, you got to pay real close attention to today's close, because if this opens on the wrong side of that trend, that can be an instant fall, like just a hit, reject, go. And so, like we're saying, we kind of need a tweet, right, to make us go up. But at the same time, we could get a tweet and dump, you know, or we could even get it like, just the way markets are these days, with the amount of whales and almost like a lack of market makers controlling the spread. There's nothing to say that we don't get a positive bit of news. Everyone thinks, oh, let's jump into these longs. Then the sweep happens, because that's it. Once the liquidity's there, and if it's correct, if the market's going to go up, well, then the whales are going to want to long it, but they're going to want to open into your liquidity before they open it. So good news often gives a negative impact initially, and then it moves in the right direction, or the direction that you thought it should. And that's, I know everybody listening to this has probably witnessed that, where you get a rate cut at FOMC or something, and you get a dump, and then a couple of days later you're at a higher price, right? So just bear in mind, when you do what you think is the right thing based on narrative and you open along, the whales are waiting for you to open along, because they need your liquidity to open theirs. Okay. If this is to dump, the whole candle is technically all the way down here, in that sub 90, but the trend retest, which hasn't happened yet, from being broken by up here, is sitting at about 95, and the support trend is sitting at about 93,500. So based on that range that could play out on the previous time frame, you see where the trend is now sitting on this time frame. Okay. And now let's look at potential positive ranges. So this range had a close. If it comes back and tests the base of the range, that's going to be somewhere in this area in here, inside this candle. So we've actually almost got short ranges that are playing straight down into potential long ranges. Okay, so that means that price is under that 96 area. If you get 96, that's probably still a pretty good entry. You could at least see a minimum bounce back to 108. If you can get something in that 93 range, then that's potentially even better. But yeah, that's all we really need to say about that one. And here we go, 52-day. Guess what? Another range. So this is looking at something. We've got a trend here, which is around that 97, 96. We've got a support candle, which could build a range. It's already had these two candles close over the 1618. So now it's coming back to test the base of that range. It could then push up to 131, 152, or even 174 if it completely plays out. Okay, so, and this is the evil one. This is the one we don't want today. Okay. This is legitimately a candle that, if we close below 101,449.7 today, could kick off the process to go back to 17,900, which would be the untested hold at the very, very base of the bull market. Okay, so this is kind of what we don't want to see happen today. Do not want this candle to get engulfed. The wick is probably the real danger zone because that means it happens fast. So that would mean a close under 98, 137. So we definitely don't want that to happen today. But even the body, you just do not want it closing under the body there. That is the scary one. You do not want to see that. Now on a brighter note, and this is a real battle going on, because this 93,570 level is the hold of the 70-day positive range. It has closed the second candle over the 104. We rejected off the level 2. That's the all-time high. Well, it's close. These high time frame ranges, you've got to give them a bit of slack. You know, the wicks will go up below them and down below them and all that kind of stuff. But if we get a squeeze today and we actually close today over 104.081, then it's pretty fair to say we do go back to 121, potentially 138, and the top of the range will be 155. Okay, so that's that level. So right now, depending on how this closes, it's either back to the very beginning of the bull market is one of the options, or maybe some all-time highs, you know, and a blow off top up here, you know, 138 or 155. So hope you enjoy that one. And let's have a very quick look at Tesla. So being a weekend, I guess nothing really changes too much on Tesla, but just to recap on pretty much what we would have said yesterday, we've gone back under a prior broken trend. So, you know, as long as we can open above that 432 area, then it's probably going to come up here and test the hold candle in confluence with the range trend, which is going to be about that 440. If it can get over, sorry, I just took a really big drink of my coffee on pause, probably a bit too quickly. If we can get back over that candle, or if by some miracle it opens on the top side of all of that, then it may come up here and test the backside of some of these trends at about 448, 454. But just bear in mind, there is a daily hold level in play. So the weekly looks a little bit, yeah, so the weekly looks like it could break down as well. So I would have put this in here yesterday. So if the next weekly candle ends up closing under the 415, then you've got range creation in play, which you know, means you're probably going to lose your trend and you're probably going to head back down to, you know, this 300-ish sort of area at the lowest. But you just want to keep an eye on these various levels like 383, 351, and 319. Just to see as it moves through them. But if it can get back up above here and not create this hold level, then it may come back up and test the top side there at 477. Got to say though, that does look a little bearish. Just yeah, the fact that it's already engulfed that, and it's engulfed the wick too, because there's basically no wick on that candle, so it's engulfed body and wick. The only thing that could technically save it is the reverse side of this trend, this range trend, but it's not a hard close range trend. So scary thing is it looks the scary thing for Tesla holders is it actually looks like a weekly liquidity sweep. So if that is a weekly liquidity sweep of that range, then they're going to want to try to go down somewhere to, you know, big liquidity sweeps of weekly ranges typically end up with bigger moves to the downside. So hopefully that hopefully there's some post-market, pre-market activity or whatever, and this thing opens back up above that weekly trend, which really means opening, you know, anywhere above there. It's like 434, or sorry, 440, 446-ish. That sort of stuff. It's got to be up there. Got to be up there. You do not want it here. They're here bad, up there good. Okay, that's Tesla, and yeah, that's us for today. Sorry it was a bit of a long one, but you can always watch it on 2x. I'm no more understandable at high speed than I am at slow speed, so that might help. And yeah, like, subscribe, and come join us in the Discord and all that other cool stuff. And there's some really, really cool things coming. So catch you later.